Thank you, Steve.
My pleasure.
Okay, Peter, I'm promoting you to panelist. So I'm going to make sure you're unmuted. You're unmuted.
Can you hear me?
Got you, Peter.
Great. Something worked actually as planned.
Okay, so there is a screen share option for you to show what you're looking at.
Yeah, there is a green button in that little panel. If you mouse over the bottom of your screen, there it has some options. One of them is...
I know Zoom, so let me just...
perfect. Perfect, that's good.
Okay, so... One second, I am... Okay, one second. My computer seems to have acted up here.
Okay, here we go.
Does that work?
All right. Yep. It works, Peter. Thank you so much, Peter, for coming back to F.A.C.E.
Great. It's good to be here.
Okay, so, why don't we start with what Steve and I were discussing and came up earlier in our session. And I saw some type of interesting tweet by you talking about Deutsche Bank, but it looks like you've prepared so much great stuff. Maybe you could just give us your take on this dissolution or restructuring plan of Deutsche Bank and the implications for possibly the euro and risk.
Well, basically, what I'm seeing right now in the markets is something I've not seen really for a very long time. And I have always had a trading perspective where I have a macro overlay combined with technical, systematic, etc. And in this particular year, macro has broken down completely. And so now here we find ourselves in a situation where in aggregate, if I show you, let's see, where is this chart? This is showing sentiment. The green line is bulls. Pretty much just about the 2009 lows. So we have as many bulls here in the market as we did slightly more than we did in 2009. And
so that's a bit pessimistic because look at where prices were, right? So you're saying that the market is considering all the price gains still skeptical.
Well, yeah, and this is, I think, a Deutsche Bank situation fits very nicely in there. Essentially, I'm not trying to be
Pollyannish.
They could be contrarian, but I have to say, what I was expecting was a blow off from 2730 into 3000, 3040. That was my initial expectation, with an upside of 3070, basically.
Now it seems like that's what everyone's looking for.
Yeah,
so
and
it probably doesn't work.
Well, the thing is it doesn't work. And the reason it doesn't work is because, in my opinion, what has happened is that the pessimism has stayed so persistent throughout this ramp, which has been, one of the strongest that I've seen. I mean, literally the ramp off of the 2730s was actually faster than the initial move off the low from December in a lot of ways. Not in every market, but in some markets. And, pessimism there was just ridiculous. And then it's maintained its ridiculousness, pretty much the whole way up.
So is this a classic case right here, Peter, where if you don't learn how to change your mind, you won't have any change left? Because I'm sure you could admit that you were skeptical of the market the last time we were on.
Yeah, well, this is actually an important.
You were part of that green line.
Yeah, not only was I part of that green line, a big part of my work has to do with macro. So I've always taken a macro overlay and looked particularly at bonds and commodities and other kinds of influences that either lead or confirm moves in markets. And as an example, I'll just tell you, for example, that if you have prices dropping and sentiment dropping, that's a confirmation. So if sentiment is negative and prices make a new low, with
That's a confirmation for you.
The same scale of low that the sentiment is making the low. So basically, if you look at your swing lows and you look back and you say, okay, now are we making a similar type of low? Then that's a confirmation that will lead lower. But when you have the exact opposite happening, when you have prices at all-time highs and sentiment just above lows of 2009.
That's a great point.
Then what you have is a non-confirmation.
So what do you think, Peter? Kind of because of the sentiment setup, and I always think that when everyone's looking for one number or level, it either never achieves it or it's meaningless. Does this type of sentiment open the door for something like 3,300 in the S&Ps until we see more exuberance?
This is the chart which I have been showing lately, and I'll just zoom into. This is not particularly it's not particularly high resolution because I'm just looking at my screenshots, but you can see what we're talking about here. There's a little red box here.
So the megaphone line that everyone's looking at, it's just a huge megaphone. You're showing that it's going to break out and have a throwover for another wave to the upside. And where would 5 come in, your theoretical 5 number-wise?
Once sentiment started to do this, and I want to stress to you guys that one of the things that I have changed in my process is that I have eliminated macro except as a very distant influence. So I want to know the context in which I'm operating, but this central banking era
it's changed everything.
It has changed. I actually, in the beginning of the year, had thought that firstly the central bank had made itself look pretty not credible, that Powell was going to be a little bit more disciplined, and that the market wasn't going to be so
ebullient.
Well, no, not ebullient, but easily deceived. So, I thought basically after 10 years of QE, the market was going to require real action by the Federal Reserve, not just mouth opening and words coming out. And what happened is the exact opposite. We had 2 situations going on simultaneously. One, I think, is worth discussing because it's going to be a common technique used, I think, for years. The European debt crisis with Greece, which is appropriate since I heard you guys talking about the Greek elections, and I'm very happy that they got rid of that terrible administration over there. But the Greek situation was a disaster in Europe, and if you remember, the market sold off really hard as the debt crisis started to explode in Europe, and it seemed like it was out of control. And then as it was actually spiraling out of control and really going out of control, what happened is every time Merkel or Draghi or anybody spoke, that became a mechanism to take bad news and turn it into hope. And markets always hope higher than they should. And Trump, with his China deal, has learned the art of that extremely well. So you have the Federal Reserve jawboning, and you have him, basically creating bad news, like I believe he used the Mexico situation directly to create as much bad news as possible so that he could ramp up pessimism and then squeeze the market. Because a little hope goes a long way once you've gotten people very pessimistic. And, frankly, people don't trust him too much, I don't think. And so when there's a little good news that potentially comes on the line with that much distrust, there's a potential for the markets to get quite a strong reaction. And you combine that with the central bank, and that creates an interesting situation. And then there's another dynamic here, which is that the first interest rate cut by the Federal Reserve is usually received positively. And one of the reasons that happens is because
Is a surprise?
well, no, not the surprise. It's actually that the market, in its typical hopium type of mode, believes that the Federal Reserve can get out ahead of whatever issues.
They're omnipotent.
Yeah, and it
People
believes.
forget about the lag time of Fed policy. Like maybe we're living through right now what they did a year ago.
Yeah, and then the thing that follows is that 1 month after the Fed cut, usually the market starts saying, "What are we celebrating?" Because it seems like the Fed might be behind the curve.
So
And
what's
then,
actionable in this environment, Peter? How are you looking to, that you have your narrative, you have diagnosed the environment. Where do you move your money?
well, for me right now, I don't see anything that is changing the near-term picture for the upside, and that's what this chart is about. I basically think the market in this mode is going to have to make everybody wrong. So it's going to get bulls to start to really load up on positions after this breakout looks like a compelling breakout, and then anywhere from 3150 to 3400 will probably reverse and fail, I would think. And I have a lot of reasons why I think that makes a lot of sense as well. One of them is that when you think about a 10 or 11 year bull market that has been the most contrived, worst macro, like the jobs numbers, for example, a lot of people think the jobs numbers will affect the Federal Reserve's cutting. But in fact, the jobs numbers, as I posted, were terrible. They were actually the slowest growth in jobs in years, and didn't even meet the required number of 150,000 to keep up with population growth. So even though we showed 224,000 jobs created, the BLS created a magic 100,000 jobs, more or less, which were just all estimates based upon their estimates of the new businesses that were created in the month of June. And so the real surveyed jobs were very weak. And when you put them in perspective, they were very weak compared to even earlier in the year, and extremely weak. Like we're $600,000 jobs, 600,000 jobs less right now.
So is the bond market right, Peter? Recently we cracked the 2% yield on the 10-year.
I think the Fed's going to cut no matter what. And I think if anything comes up that just gets them a little nervous, they might actually do their 50 basis points. But, I'm not bullish at all. So I'm near term dealing with the market situation. I think that market situation has people cornered. Too many people are either under allocated, not allocated at all. They're in cash or they're short. Everybody I see wants to short this, and I don't really like to use what I'm talking about seeing. I prefer to look at what is going on with positioning, and that would be sentiment related. And so
do you look at COT for positioning clues?
Yeah, I do.
Is that telling you anything that agrees with sentiment or confirms it?
Chart, which I have available in the stream, actually on Zoom also, that is running, that's pinned to my profile, MCM_CT. If you go there, you can log in. I wouldn't do it now. and you can see this chart. This is a very important chart. This is up here where I don't know whether you can see my mouse right now,
Yeah.
but where I'm clicking, this is the panic and euphoria index, and you can see where we are is at 50.
Yeah.
So
no euphoria, no panic.
if you look at what happens when we're at 50 coming from panic, basically we've got to get close to euphoria to just start unwinding the energy of the panic. And this has the emotional energy in the market takes time. It's not going to unwind in a minute. And one of the reasons that I know this is because I wrote a project called Tick Tools, which is a real-time emotional interpretation system. It actually looks at where people are capitulating in the market, to what level they're capitulating, and then profiles it in a way that you can actually trade off of. And so emotions take time to unfold. And
Not mine.
yeah, but if you look at this, what we're looking at to get to euphoria in 50, we're talking about 150 to 300 points is pretty normal, and I believe that we should make lower highs in terms of euphoria, and I think that you have a subdivision of how that has to work on the slightly faster euphoria and panic index, which is the one where I'm clicking now, where I'm moving around. We would make a near-term euphoric high sometime next week or the week following, then have some sort of consolidation and make a lower high on that, which would coincide with a euphoria situation, which probably would take place sometime in August or maybe even early September. I don't see taking the shortcut here. I don't see that the markets are going to give people a chance to get in, and I don't see them giving a convenient exit for people who are trying to short right now, particularly because of all this. So I'd like to see, and there's another reason that I believe that this is going to happen, and that's because when you look at the highs we made on the sentiment index, what you see is over here into May, we confirmed those highs. So this was a confirmation. So we had highs in euphoria with highs in price. So that means that we are going to get new highs until we get to a retest of euphoria, which should be, in this case, hopefully a lower high divergent high, sort of similar to this. And that will require several attempts, just like over here in September. It never happens in a single go. Even in January in 2018, it took several attempts to get euphoria unwound.
So continued melt up into the summer.
I think we're looking at a high probability of a continued squeeze into August and limited pullbacks, like nothing big. I don't think we're going to see 80, 100 point pullbacks yet. What I do think is that if we get to 3,100, there's a good chance that we have a retest of 3,000 from there. So that would probably be a pretty obvious trade. So 3,100 is an interesting setup. Let me show you what that is. I'm going to find it over here.
What's interesting about the August timeframe, can you think of any other major turn in the market that happened in August? Maybe you're not. Huh?
Yeah. A lot of them. 1929.
How about 1982?
Yep. I mean, there's a lot of turns. In 1929, we had the blow off top of 25% move from May essentially into 27%. I think it was a rally.
That's interesting. Analog right there.
And that is similar to what's happening now. And it was similar situations. You had the president pumping everything. You had famous people talking about a new paradigm, basically permanently high plateau. You had
the rise of nationalism and fascism.
Like mad.
Huh?
You had the Federal Reserve printing money like mad. So it's very similar. And there's another thing that's going on. The Fed and the central banks are doing stimulus in ways that aren't easily tracked. So they're doing like duration sort of stimulus where they're moving liquidity into areas where it's needed more and out of areas where it's needed less. So they're not creating new money. They're just shifting around where the leverage can be created.
Okay, talking about fiat, we've had a pretty dynamic gold move. Any view on it?
I like gold. My personal
So
opinion,
does Goldfinger.
yeah.
Goldfinger, he's the man with the golden touch. Okay, go
Well,
ahead.
I want to just stress something that there's a guy named Chris Carolyn, Spiral Calendar.
Yeah.
He's probably one of the best gold people I've seen
Huh.
because he has a great title model of gold. I recommend him highly. Gold is in a weak period. It could get very negative, but I think he believes, I'm not the best person to ask about gold, but I'll just tell you, I think he believes that it's make or break here. If gold has a productive consolidation rather than a big sell-off, then it's going to be exceedingly bullish for gold. But if gold, has a pretty strong sell-off, we could see, a pretty deep, retracement. I like gold. I don't like central banks. I'm not bullish on this market. I want to just stress that.
You like crypto? Are you part of that scenario?
No, I think crypto is going to completely implode. This whole thing with crypto is a sign of the duration stimulus that central banks are doing. And whenever Bitcoin ramps like this, I get my antenna go up, and that's another reason why I felt like we were likely to have a blow off, because crypto has been ramping, and I thought it was originally just from Chinese,
Buying.
capital flight. But no, it's really central bank driven. It's excess liquidity. And that is flowing into the stock markets as well. And in this particular situation, I just want to show you this chart. This is one I've been posting for quite a while. We have a left shoulder, right shoulder, measured move to 3,100-ish. We have this local broadening pattern that is pointing at 3,100-ish, and then I believe you can see here's the bigger broadening pattern that I think will be overthrown. But originally, I thought that we would just go to maybe 3080, 3100. When I started to see sentiment lagging as the way it has, I kept having to look at these patterns and say, wait a second, they are actually going to get met. But now it's pretty obvious that it's going to take at least 7 to 10 weeks to unwind the sentiment extreme that we have now. So there's no way we can get to euphoria, resolve it, unwind it, and start to get people wrongly positioned again. But on the bullish side, we need to get people, the market needs to get people too bullish.
Okay, well then that's probably going to take both the Fed to accommodate the market and for a trade deal so that the trade fears go away. And then you'll have the fundamental backdrop of everyone saying there's nothing in the way.
Well, I don't know that actually, fundamentals actually will drive it. I think
just price, huh?
Helene Meisler says it. It's funny how price changes sentiment. And so personally, I feel like if price gets to 3,100 with bad news or no great news, people are going to be in shock. And so that will change sentiment into a situation like this market never goes down. You can't short it. If then the market pulls back a little bit and rallies higher again, especially with sentiment, faster sentiment not being very, not confirming, then we're going to end up with a euphoric peak on the longer term, and shorter term, slightly more pessimism. And that would create a situation where I think basically people who have tried to short completely give up, and people who haven't gone long feel like they've missed the whole thing and they better get in now. And managers
So do
feel
you
like,
just sit on the sidelines here, Peter, and wait for
but
this
I'm
to manifest?
no, I'm trading short term, so I
Okay.
don't hold positions overnight except for options positions right now.
Mhm.
I will. I mean, I trade futures, so my job is trading futures. What I
Have you
won't.
tried the new micro S&P? I think that was
No,
recently
no, I
launched.
haven't. But I have a few trading strategies that will benefit dramatically from that. And
Okay. I was wondering if any liquidity was coming in there because the mini is really the most heavily traded contract.
yeah, but I don't think that, it's funny, the arb between the mini, the SPY, the SPX cash options, and the ES basically mean that when you need liquidity, it'll show up in the micro. I think you could trade quite a lot of money in the micro, even though I haven't really looked at it. Um, and for me, like, all of my strategies use a process of swarming. So basically, I will look at a particular position I want to build and then risk manage it with a swarm of sort of activity underneath it. So the higher resolution I can actually operate on, the better. So if I trade 10 ES contracts or 100 ES contracts, that's I get 100 shots to manage that position. The same position in the micro would be 1,000 contracts. So that means I have 1,000 shots at being able to risk manage that position. And that's a really phenomenal opportunity. So that's something that I will probably move into trading the micro for systematic stuff.
All right. Well, Peter, I really appreciate, you stepped up.
Well, I want to just bring up
Go
one
ahead.
other thing
Okay.
here, and that's the yield curve. Everybody keeps talking about the inverted
Yeah,
yield
I'm
curve.
interested.
Take a look at this. We have 10-year versus 3 months, which is inverted, 5-year versus 3 months, what's inverted. But the yield curve that matters is the 10-year versus the 2-year, and that is not inverted. And I think that is another backdrop for why it's going to be fairly easy to squeeze people.
Do you think we could have some yield curve steepening with the Fed lowering rates?
Yeah, I think that's probably going to happen.
Okay. So, yeah, so I mean, everyone worried about the inversion, forecasting recession. Maybe that's why the banks have really picked up.
And then the other thing I want to point out here is the skew, and this is just something you guys can keep an eye on. The market's not, in my opinion, going to top or be euphoric enough to start to top until we get these spikes in skew. And the reason is because skew represents people buying out of the money protection. And if you notice, nobody's been buying out of the money protection. It's been increasing a little bit lately, but we need to see people buying out of the money protection, like at decent levels, to start to see that there's some fear coming in and that there may be euphoria building in the market. And I think that that's sort of something to keep an eye on.
Okay, interesting presentation. Strongly neutral. Sentiment is not lining up for an important market top for several months. Have I encapsulated it,
Yeah.
my friend?
Yeah.
Okay, so everyone, I thank Peter. What's the best way for people to follow your work, Peter? It's excellent. Really, you have great insights into the market. I learn every time I talk to you.
Yeah, MCM_CT at Twitter. So.
Okay. All right, my trading warrior brothers, strongly neutral through the summer. Hope you get long and pips rain down on you, and your scalping is the best you've done in many years, and pips rain down on you.
Great. Catch you guys later.
All right, that's Peter Campbell. Could follow him at MCM_CT, bro.
Yeah.
Okay, so that's a wrap, everyone. I'll see everyone for Turnaround Tuesday. Don't just count your pips, count your blessings, and have a great trading day. Thanks again, Peter, for stepping up today. Appreciate it.
Great. Thank you.
All right. Adios, everyone.